Well, oil prices rose ever so slightly on Monday, but an increase in drilling activity in the U.S. and uncertainty over Libyan and Nigerian production cuts muddled the supply outlook. Well, for more on the global oil markets and all things energy, let's bring in Carl Larry, market specialist with Thomson Reuters. He joins us from Houston. Thank you so much for being with us.
Thank you, Rachelle. Good to be here.
Now, let's start with your take on this latest move that we saw in oil prices. How optimistic should we be at this point?
Well, for every move up, there's another move down. I think that right now, the way the oil markets are moving is that we're still sideways. We're in a range, and we're probably going to stay there. I think there's a little bit more upside to this move as demand increases, especially as global economies start to pick up. But for the most part, stuck sideways here.
Now, for people at home who are wondering how all this affects them, what are really the key ways that the fallout from this global oil glut is affecting producers as well as consumers?
Well, starting off with consumers, that's the good news. The consumers are starting to see stable prices, lower prices, and able to kind of see economic growth wherever it may be, just pick that up. But on the other hand, producers are struggling. Countries that do produce oil that really make this and make their living around it, they're struggling here. These low oil prices, especially as they are going to have a detrimental effect on their economy down the road.
So going forward then, what's OPEC's plan to respond to what's happening in the market, and does it go far enough?
It's going to be a tough call. We'd like to see OPEC kind of adhere to their cuts. We'd like to see OPEC maybe make deeper cuts and adjust to these oil prices, especially at these low levels. But that remains to be seen. We haven't really seen a lot of positive effect from the cuts up until now, and we're not really seeing any new cuts or cuts that have been implemented. So it's going to be a forward.
So why has it been so challenging to try and rebalance the global oil market?
Well, from a production standpoint, money is money. People don't want to give up what's on the table. So when you have countries that can produce and make money at 50, these are the same countries that will take money and produce at 40. So it's going to be hard to reel it in. Countries like the ones that are in OPEC, except for a few select ones like Saudi Arabia or Kuwait or Qatar, they can step on the sidelines. But the other countries really need all that. So it's a tough challenge, with all these countries in OPEC and all the oil production.
And speaking of Qatar, are you surprised how little the oil prices moved given the diplomatic spat that's going on now in the Middle East?
We're not seeing a lot of news from anything making the market move anymore. So hearing that news from the Middle East, we would thought we'd see a little bit more action, but we're not. And right now, I think people are finding this comfort zone between $45 and $50 that oil is just where it should be. So as we see news come out, whether it's an Iran or Iraq, or Saudi Arabia, or the U.S. and more rigs, we're not really seeing a lot of action on those news headlines.
And let's look at the U.S. How has the entry of U.S. shale to the picture changed the situation, the oil picture for OPEC?
It's twofold, and not many people get the second part. So the first part is very simple: is that oil production in the U.S. is rising. We're exporting more oil. We're using a lot more oil of our own domestic production. The second part that not people understanding is that we are pushing back. The U.S. used to import over 10 million barrels a day just a few years ago. We've narrowed that down to about 7 million barrels a day. So that's 3 million barrels a day that was being produced by the rest of the world that has nowhere to go. So that's it's really having a big effect on these oil prices. We are definitely keeping these prices down.
I'm sure a lot of people are watching. Thanks so much. Carl Larry there, market specialist with Thomson Reuters.